Hi, I'm Mike Cintolo, Chief Analyst of Cabot Growth Investor and Cabot Top 10 Trader, and I'm here with your Cabot Weekly Review, recording this on Friday, September 8th, late morning, around 10:45, 11 o'clock here on the East Coast. So after what I would consider to be two or three, not decisive weeks, but, positive weeks, encouraging weeks, however you want to term it, this week's kind of been the opposite, a little bit kind of back in the soup where the big cap index is down 1 or 2%, small mid cap index is down, say, 3% or a little bit more as I record this anyway. And just sort of, we just couldn't quite, the intermediate term trend was kind of right on the edge of sort of a shakeout buy signal. I showed some of those precedents, from 03 and 09 a couple of times, but that hasn't really worked. The broad market kind of got some signs of health and then kind of back at it. Okay, that sort of thing. So right now, I just think, from that point of view, it's just the correction phase that started really in earnest at the very beginning of August is just still intact. Okay, I mean, so whether that means we go down or chop or up, down, and all around, we'll see what happens. But there's not a lot of money being made out there. Now, on the flip side, I will say that some of the underlying positives that were kind of poking up here in the last couple of weeks, meaning we saw some growth stocks pop on earnings. We saw some names, show some real accumulation. Those names have actually held in there pretty well. And then just broader stuff like, the NASDAQ, I think the NASDAQ compared to the consumer staples actually hit a new high or, a multi-month high on Tuesday. So it certainly seems like there's more stuff, not a ton, but more stuff holding up, rounding out, forming launching pads, however you want to phrase it. But until the market can get out of its own way, whether it's, has to work through these issues of the Fed and interest rates and, now there's China and will the economy fall off a cliff, all this sort of stuff going on. The market's just kind of working through that. Overall, I still think the odds favor the next big move is up. But right now, I think biding your time, being cautious, and just being selective on the buy side and what you own and keep makes sense. In Cabot Growth Investors model portfolio, we're about 45% in cash. Didn't make any moves this week. I like what I own. To be honest with you, there's two or three things I wouldn't mind nibbling on. So, if the market can firm up and we can kind of hold in there, maybe another week or two or three, I think there could be some opportunities. But again, until the market kicks into gear, it's kind of, you don't want to get too far over your skis because there's not much money being made quite yet. Okay, let's hop in the charts. I'll show you what I'm talking about. I'm using a program called MarketSmith. You can learn more at marketsmith.com. It's a product of Investors Business Daily. Start here with the NASDAQ as usual. And, so this is the decline here recently. And in the NASDAQ, I don't want to say it was all Apple and NVIDIA, but there was definitely kind of a mega cap flavor to it this week. Whereas a lot of sort of the under the surface growth stocks, I'm not saying they soared and went higher, but they kind of did more nothing than sell off. But even so, it's not, this week's down wasn't what you wanted, but it wasn't like anything at this point where I'm looking at it and it's some major change. I mean, basically, you can just say the intermediate term trend is sideways. You can say sideways to down, however you want to define it for the NASDAQ. We're just kind of in this range and in this correction phase. My bigger thing with these indicators for the trend is it's not so much is it neutral or negative, or the question is it positive or not? Okay, and right now I would just say it's not positive, which means you're still going to be subject to a lot of whippy action at best, if not more selling. Okay, S&P 500, same sort of thing. Down, I don't know, rallied maybe halfway back up, ballpark, now pulling in, but kind of just sort of in the middle here near its moving averages. The broader stuff is a little bit, the New York Composite, same general thing. The broader stuff's a little bit more, it's weaker and it's a little bit more worrisome, I guess. So this is a Russell 2000, this is IWM. And, it's down here it's already kind of down to its prior lows. And as we'll see in a second, some of these cyclical areas, they were the ones that kind of really got hit as soon as we got back from Labor Day on Tuesday morning. And that's kind of weighing down some of these things. Some of the regional banks, those are down 5 or 6% this week. So we'll see what happens. This is small caps. This is mid caps. This is the MDY, same sort of picture. So, and I can't pull it up on MarketSmith, but if you look at the S&P 1500, which is the big, medium, and small caps combined, okay, those three indexes, 70% of stocks are below their 50-day line coming into today. Now, that number moves quickly, but just kind of tells you where we're at. We're in this correction phase. It could easily get worse. Maybe the bottom falls out of the market. Who knows? But at this point, I think there's, it's certainly not an environment to really, push the envelope on the buy side. Like I just said, some of these areas, like this is the Dow Transports IYT. I would say that the cyclical broad area, whatever you want to call it, not so much commodities, but more sort of the cyclical names. New correction low here. XLI, which I had been highlighting, back here because it was just in this persistent advance. I won't say it's fallen through the floor, but it's already kind of back to its lows, kind of like the small and mid cap charts. XLB, which is kind of materials and processing and stuff like that, same sort of thing. So, few stocks are hitting new highs. Like I said, not a lot of money being made, that sort of thing. On the flip side, and of course this means more to me because I'm a growth guy, but just even for the market sentiment, like what big investors are doing, here's the ARK fund. Again, I hate to keep mentioning because it can dance to its own drummer and it's an actively managed fund. So, but it tends to move with some of these glamour names, obviously. Got really, really hit hard here and it's bounced and it's not, free and clear or anything, but at the same time, you can just see this week, for instance, it's basically didn't do anything. I think it's up a little bit on the week, whereas the Nasdaq's down a couple of percent. Okay, the IPO fund from Renaissance, same sort of thing. Okay, so I kind of call these our growth. Cabot tides is kind of the general major indexes, intermediate term trend. This is kind of our growth tides. We look at a few of these growth indexes and see how they go. They're not positive yet. This is kind of something I will be cluing on again for growth stocks, but also just as kind of a risk on, risk off measure for the general market. So they're holding up there okay. Even the semiconductors, which did get hit this week, I don't want to make this sound like a good thing because they did take a hit. It's a little, I don't want to say double toppy, but again, it's just much, it's nothing like the Dow Transports or the small caps, mid caps, the broad market. Even among some of these things that are getting hit in growth world this week, they're still well above their prior lows, okay? So overall, and then one more thing, which I like to mention every week. So again, we're just not, up is good and down is bad. So I'm not trying to make, down into good, but again, you're not seeing any rally in like XLP and stuff like that. And I know the dollar and interest rates, I say this every week, but I mean, the dollar was strong last year and XLP, kind of led every rally. It was sort of a defensive rally. Not that we're really rallying here, but, you can just see it's kind of just scraping new lows. This is a very thin ETF. It's POWA, POWA, but it's basically a bunch of, it's supposed to be stocks that really won't get hit. Earnings won't get hit too hard in a recession, which basically means they're defensive. Okay, so you can see again this kind of backtrack to its 200-day line, whereas the Nasdaq is kind of somewhere up here in terms of its recent correction, right? So I'm still seeing signs under the surface that there are some leadership names that are trying to round out their launching pads. They probably need more time. I'm not seeing some huge, some massive breakout in interest rates, a huge rush into defensive stocks. Something where something's really coming loose in the system. I would say I mentioned this earlier. This is KRE, which is regional bank. So, it's very volatile, obviously. These are kind of the worst of the worst. So it's down 5 or 6% this week. That said, I don't know. It's back to its lows, not good, but it's not something where it's falling out, the bottom's falling out of it. We start doing this, all of a sudden, something might be coming loose in the system. So far, I just think the overall view is kind of hope that the correction was over, but I can't conclude that. Couldn't conclude it before, can't really conclude it yet. But the odds still do favor that the next big move is up. So it's just a time where I think hold some cash, be selective on the buy side, take some partial profits if you got them, sort of thing. But just kind of keep in touch and keep the leadership list ready because hopefully more and more names will be popping up as they have here the last 2 or 3 weeks. All right. We'll start when we get into individual names, growth stocks. This is Splunk. It's not a new name, but it's one of these trends I wrote about in Growth Investor this week. There's been another kind of wave, I don't say wave, mini wave of stocks that are transitioning to a subscription business, and that takes 2 or 3 years. It plays with the numbers. I'm not going to get into it here. But this kind of looks like, it really wasn't a leader much the last cycle. Nice breakout and really just sort of smoke up a chimney here. I guess it's down today for the first time in a couple of weeks. So we'll see how it goes, but that certainly looks like, not that it's going to go triple overnight, but something like a lot of institutions can dive into. A lot of these I mentioned last week just to show you. This is Samsara, which had your big kind of break. It depends how you want to measure it, but kind of a breakout last week on earnings. Pretty good volume, kind of trying to come out the top here. I've mentioned this 100 times on this video, and you can just see this week just kind of hanging in there. I think it's up on the week. Okay, so that looks pretty good still. Duolingo, this is one of these names where In fact, you can see this, right? This is, I didn't even know this, but so this is yesterday, right? The stock went from, bear with me here. Okay, the stock went from 157 to 148 just in the day. So it's a crazy stock. I mean, that's 6% on the stock. So it's a crazy stock. It's going to move around from high to low a few percent a day. But it kind of looks like Samsara recently where it has, oops, sorry about that, where it has kind of this double bottom pattern. It's got resistance up here. And it's really just been kind of marching higher here the last 2 or 3 weeks, kind of regardless of what the market's done, okay? You know, it's a hard stock to buy on strength in a iffy market, you know, that sort of thing. But I'm just flagging it. It is on my watch list. And it does have a very good story. Pure Storage, I know I mentioned this last week. I just find it interesting because it did have this was earnings and some AI stuff. And then this is a very tight range on the weekly chart. And it had this big shakeout on earnings, and it actually went all the way back to new highs. Now it's come back in here with the market on, you know, lighter volume. So again, a lot of these things need more time. They might shape up, but overall, I kind of like the general pattern of it up on the week, on a soft week. You know, if it can really stretch its legs, it looks like it wants to go higher. On the bigger cap side, this is ServiceNow. Coming into today, I think it was up like 8 or 9 straight days, right back to its high. So kind of a, you know, base building effort here. You know, is this a top mic 600 and now this is a double top and it crashes? Yeah, I mean, it's possible. But overall, certainly relative strength, new RP high looks pretty good. Kind of its peer, except in the HR field. This is Workday. Just, you know, again, bigger. I mean, it's a $65 billion, $66 billion market cap. But you can see on the weekly chart, you wouldn't know that the market's having some correction or growth stocks have been hit. You know, it pulls in kind of the 10-week line or the 50-day line, and it's ramped higher here. So, you know, in general, pullbacks and stuff, but that looks pretty good. And then just, I always, you know, this is the, MarketSmith has this thing, and this is IBD too, you know, the group rating, you know, how is the sector doing, which is important. And so this is solar. Solar's terrible. You know, it's like they're all, if you look at the charts, they're all terrible. But I keep my eye on them because there is a lot of sales and earnings growth going on there. And some of these stocks are newer, and they have great numbers, great projections, you know, all this stuff. This is NXT, which I've mentioned before. They do have some share overhang, some closely held shares from the IPO back here. But you can just see great numbers down here. I hope you can see that. Big sales and earnings, big estimates. It's not, you know, it's not cheap, but it's not crazy expensive. It's 32 times earnings. So it's just trying to round out here. It's kind of been straight up here, but, you know, maybe it can sort of base out. Kind of its peer in there is Array, ARRY. This one's always been, I mean, just look at this over the last year. I mean, just totally trend follower's nightmare, right? So it's important to stay out of these things until they confirm. But this volume a few weeks ago was the highest since I think mid 2021 back here when it really got nailed. And so, you know, let's just see if it can set up. But I'm just keeping a loose eye on solars. They've been kind of out of favor here, or at least not participating for, you know, really for months. So maybe maybe they'll be sort of next in line here. Outside of like pure growth, this is chip equipment, but I thought this is interesting. This is KLA, used to be KLA 10 core, KLAC. You know, had this breakout base, you know, gaps on earnings, base or tight consolidation, not doing anything wrong. LRCX, which is Lam Research, same sort of thing, right? Breakout. Of course, these are pretty, you know, homogenous chip equipment group. So just you know, respecting the 50-day line. Maybe it breaks, you know, who knows? But I'm just noting it that, you know, the longer these chip equipment names can stay resilient, it's probably a pretty good sign, especially when you're talking about an overall market. It's not like the market's at new highs and these things are threatening to break their 50-day line. This is happening while the NASDAQ is pulling back. It's kind of in the middle of its range. Obviously, the broad market's weak. So we'll see how it goes, but I thought that was interesting. I mentioned CrowdStrike last week. This is Zscaler, kind of a similar chart. You know, was a leader last time, got destroyed, and then really just kind of went up out of nowhere. I mean, there was no bottoming action. It was just a whoosh, you know, like this sort of action is similar to, you know, when you have a stock that's been going up for 2 years and then all of a sudden it's down 20% on earnings. You know, it's a glamour stock, and that can really just be the top. So this looks like the bottom. It's kind of been going sideways here. Supposedly the guidance wasn't that great or whatever, but I'm just looking at it. It looks like a decent setup here. What you want to do with it, if you do anything with it, is your call, but looks pretty good. Oil names still look pretty good. Oil is strong. Prices are strong. Some oil stocks a little bit more mixed, you know, with the market here. But you're looking at, this is Civitas, CIVI. This was in top 10 a couple of weeks ago, I think. But you can just kind of see a nice persistent advance, kind of draw a line pretty much through every bar. It's up to you what to do with it. Usually if you get kind of a reasonable, not a huge, 10% down, but a reasonable sort of shakeout or group rotation, sometimes those things can provide some opportunities. Northern Oil and Gas, NOG, I think I mentioned this before, same sort of pattern, accelerated higher. It's a little, it's not thin, it's not small, but it's not big. But accelerated higher, 25-day line now stretching higher. So oil still looks generally good. And just a couple of random ones. This is Coupang. I have to be honest, I haven't done a lot of research on this. It's a Korean online retail platform, but it's big. I mean, it's $5 billion of revenue, US dollar wise, a quarter. Came public right at the top, or right at the growth top. Good for the company, bad for the stock. And you're going to see it's been bottoming out. And just look how like all these weeks are very not so volatile. There's a pop here on earnings and stuff, but it's set up this base, whereas back here it was just up, down, all around, kind of like that ARRY chart. So what I just noticed here is just, it's kind of got this 20 resistance. I'm not giving you a breakout level because, maybe the breakouts fail, but either way, it's kind of shown some oomph. It gapped on earnings, pulled back, but just to the 50-day line. It is very liquid, even though it's lower price. So just an interesting name. And then just, biotech and medical's been not good this year at all. In fact, just for the hell of it. This is XBI. I mean, you can just see it showed some life last year during one of the bear rallies. And it was like, okay, this thing hasn't led for years. It's going to be ready to lead in the next bull market. And maybe it does. Maybe things kick into gear and it's like biotech and medical. But, it's sitting here near its lows. So biotech hasn't been the place to be. But I will say, and this isn't pure biotech, but this is Novo Nordisk, which is a Denmark company based in Denmark. But you can see it's been a nice uptrend here. Just had this kind of breakout a month ago and just no selling. They have a weight loss drug and all that. Eli Lilly's another one. Again, not really biotech, but, pharmaceutical. This has been a sharp uptrend. And again, same sort of thing, gapped on the news and has just been kind of cranking higher ever since. So honestly, there's a lot of other stocks I didn't mention because we kind of mentioned them in recent weeks. So there's a decent amount of stocks out there. I wouldn't say it's, it's not 1999, obviously, but there's a decent amount of stocks out there that are acting well. But at this point, the market, to me, the kickoff to the correction was this day right here. We pulled back, but nothing big. But then this was the day right here. I think this was August 3rd or 2nd, August 2nd. The NASDAQ got hit, growth got destroyed, and it just kind of was, obviously got hit very hard after that, okay? So we've had this encouraging rally. Now we're pulling back. Don't anticipate things. Don't, let everyone else worry about what the Fed's going to say next week or a couple weeks from now, an interest rate. Just watch it day by day, week by week. I still think the odds favor the next big move being up. I don't think that's what all the studies say. The long-term trend is up. There's a lot of pieces of evidence that suggest the next big move should be up. But whether this correction ends in a day or two, or it takes another 3 months, or maybe we're ready for an October, bottom, like sort of a quote unquote typical October bottom, we'll have to see. Right now, I think it's okay to, throw a couple lines in the water, take some partial profits, maybe nibble on some resilient stuff, hopefully on dips. But we're also holding a good sized cash position until we see more evidence that the buyers are truly back in control. Okay, I've talked long enough. Thanks for listening and coming by, and stop by again next Friday for another Cabot Weekly Review.